And we're live. Happy Monday, everybody. How are you all doing? If you are here live, welcome, welcome. If you are watching this on the replay, we are live here every Monday at 1 p.m. Pacific time, 4 p.m. Eastern time, and we talk about something to do with e-commerce. I am mostly about eBay, but also sell multi-channel. So I sell on Poshmark, Etsy, Cherish.com, and some Facebook Marketplace too. But eBay's home base. And today I'm super excited because one of the biggest struggles that I hear, and that I have actually as well, is how to keep track of all the numbers. What do we need to know for taxes? And I mean, you guys left some awesome questions, everything from some beginner questions on some basic bookkeeping techniques to some of that more advanced stuff. So we are going to cover your questions today with Mark Tews from Not Your Dad's CPA. And I'm going to bring him on and let him tell a little bit about himself, how he got started in this, and how he specifically knows what you resellers are going through when it comes to your numbers. So add him on here. Hey, welcome, Mark.
Hey, well, thank you. Glad to be here.
So yeah, first, if you could just give everybody a little background and, how you got into the whole reseller side of things.
Yeah, so let's see. So I started, I did accounting in school in college, and then I worked in public accounting and corporate finance for a few years. But I was, I became a CPA along the way, and I decided to start doing taxes on the side just to see if it's something that I liked and if it's something that I wanted to, eventually start focusing on more. And, about the same. So I started, I don't know if it was like 2015, 2016, I started hearing more about people I knew who were selling stuff online. My friend's brother-in-law was making tons of money, like selling just really basic items on Amazon. And about that same time, I picked up like a client or two who sold on eBay, and I didn't even know it. And I just from having been on a podcast of people who sold on eBay, I don't know, it just kind of all came together at the same time, and I started selling on Amazon as well, and just started getting more online reselling clients, and just decided, hey, I should start focusing on this niche specifically because there's so many people diving in and there's so many questions surrounding it, and I'm doing it too. So, hey, it just seems like a good idea. So that's kind of what I've been doing for the past few years.
And obviously I'm all about the niche. So I think it's brilliant because you can really specialize. And I know I trust you more than I trust the guy down the street that does taxes that has no clue what resellers go through. So I appreciate that.
Yeah. And it's not like extremely complex, but if you don't see it every day, you might not know exactly what to do. And it's like almost every client or tax return that I deal with, it's they're selling on some online platform. So I've seen a lot of what's out there.
Yeah, it's grown a lot, especially I think especially over this last year, people have had to pick up that side hustle kind of thing.
Big time.
So let's start with just some really basic, because we have everything from we have people who haven't even started their reselling business yet and are tiptoeing in to some pretty advanced sellers. So if we can kind of start with some basics of what is the very minimum people need to do to keep track of their numbers and know what they need to have for tax time.
Yeah, I would say the minimum that you want to do to make your life easy is just to make sure that you're separating the business activity from your personal transactions. So a lot of times people will just start out, probably using the same bank account for eBay or whatever that they're using for, buying groceries. And that's not, that's not the end of the world. It'll just make it a little bit more complicated when it comes to tax time or when you decide you want to start tracking your profitability. And as you grow, you're definitely going to want to have that separated out, mainly for those two things, for taxes, so you're not leaving money on the table, and you're not putting yourself at risk by paying too little. But more importantly, so you can track your own profitability and know what's going on in your business.
Yeah, and I think now with the managed payments and eBay requiring a bank account, if you haven't done it before, it's the perfect time. Just go get that separate bank account.
Yeah, for sure.
So, so one of our first questions that came in was, could you cover just some basic record keeping best practices for resellers, like to track inventory, sales, expenses?
Yeah, so I think one thing that's important to remember is that there's no magic bullet. There's no one size fits all for bookkeeping, because each platform behaves a little bit differently. And there are a lot of different bookkeeping programs out there. Some are pretty simple, some are a little bit more robust. And you don't even necessarily need a bookkeeping program like QuickBooks or like GoDaddy Bookkeeping is a simpler one. Like if you are a spreadsheet person or want to stay pretty simple, then you can do a spreadsheet.
That's what I do.
Yeah. And people ask me if that's okay. And I say, absolutely. If you feel comfortable with that, I think that's fine. It might eventually become pretty tedious depending on the number of platforms and transactions that you have, but there's nothing wrong with it if you're comfortable with it. So yeah, it's really a matter of evaluating what's best for you based on the number of platforms you sell on and your comfort level, basically, with bookkeeping.
I actually have a virtual assistant who I log the things in as I buy them, which no software out there is really going to do that part for me. I mean, any way I do it, I have to log that stuff in. And so then I just have her come in and log the sales no matter what site they're on, and it breaks down the fees, and then I have my net profit. It's worked pretty good.
Yeah, there's different ways to do it. I mean, the benefit of having a bookkeeping program like QuickBooks or something is that throughout the month, it'll import automatically your transactions. If you're purchasing supplies or if you have software, those will just come automatically into the program and you can categorize them. But what it doesn't always do is bring over your sales and platform fee information from the platform, like from eBay or from Amazon.
Right.
So then you might have to get like an additional program integration that pulls that stuff over for you. But then, one interesting thing is that some bookkeeping programs do directly connect with the platforms, like GoDaddy Bookkeeping. Surprisingly, even though it's a really simple bookkeeping program, it integrates directly with eBay and with Amazon. But at the same time, it has limited capabilities because it doesn't have asset and liability accounts. It's like revenue and expense accounts only. So there's all these little things. Like, the best thing is probably just to, you need a customized like setup. And that's one thing I help people do. Like, they'll tell me what their situation is, and I might tell them what makes sense, based on all those things. Budget.
That's always been my struggle with QuickBooks, is like customizing it for me, because it all just then seems, I used to use it and it just like, it's a big gobbledygook to me.
Yeah. I mean, it was originally designed for accountants with an accounting background, so if you don't know debits and credits and things like that and what's going on in the background, it can get overwhelming pretty fast. Like I love it. It can do a lot of things, but I've found that people will sign up and try to do it and then just let it go, and it just becomes a lot more messy.
I find there's really like two kinds of people, and I'm sure there's some gray over mixing it, but there's the people who love numbers and are really good at numbers, and then there's those of us who don't. I mean, numbers like really hurt my brain. I can sit and figure them out, but man, it does not come easy.
Mm-hmm.
It probably comes super easy to you.
I mean, the experience helps, but it's interesting because I deal with a lot of different people, and some are really, like you say, detail oriented and like have their numbers pretty close, and others are like, they just want me to do everything. They're like, I don't want to.
I used to own the URL DannyHatesNumbers.com. I'm just saying.
It's a good one.
I mean, because it's something that ever since I have been coaching and teaching people about e-commerce, I mean, you have to know your numbers, like them or not. You cannot be successful if you don't know what your numbers are. You got to know if you're losing money. So, okay, so let's see. Let's just kind of go through these questions here. When adding up costs for deductions, do you use cost of total goods purchased or cost of goods sold? And I think something just changed this last year on that too, right?
Yeah, that's a really good question. So that revolves around the question of inventory and how do you deduct your inventory? And historically, it's well, I'll say before 2018, the rule for the most part has been that you don't deduct your inventory until you sell it. So when you purchase it, it becomes an asset, not a deduction. And then when you sell it, that's when you can deduct that inventory. But in 2018, that actually, with all the new tax rules, that changed. And you now have the option to deduct inventory when you purchase it. So that's what you would call like the cash method for inventory, rather than the accrual method, which is the first way I described. So yeah, really the main rule there is that if in your bookkeeping you deduct inventory when you purchase it, then you can also use that same method on your taxes.
So I think the way my tax lady has done it is the accrual method, where you deduct it, and then we have a starting and ending inventory each year.
Right.
So do you recommend one way or the other, or?
Yeah, I mean, so that one depends. Like if you value simplicity over, so if you value simplicity, and maybe you're just doing the selling as a hobby and you're not really trying to grow it a lot necessarily, like I would probably just do the cash method, like just deduct it right when you purchase it, because that's simple. You don't have to track your inventory, because you don't have to go back and try and sort, okay, what's the cost of everything that's sold and all that. So that's what I would do there. But the accrual method is beneficial when you want to have more insight into what's going on in your numbers, because that will match up your cost with the revenues that they're generating, to give you more insight. I'm looking for a different word, but more, just more knowledge into what's actually happening with your profitability.
So, I'm thinking about this because I do that method, and I've always wondered, so when figuring out inventory, do you go based on the value that it's listed at, or the value that because everybody knows here that I price my stuff knowing that I'm going to discount for most things at some point. So is it based on my listed amount or what I expect to sell it at?
So it's based on your original cost, like what you paid for it.
Okay, so it's just the cost of the item. Got it. Yep. That's even easier.
Yep.
All right. I saw a question come through the chat here that is a really good one. Is there a minimum amount of sales where you don't need to report reselling? And I get that question a lot.
Yes, so that one, it depends. I mean, the easy answer is that it's typically on the first dollar, that you have to report. But that's not going to be true in every situation. It depends. It also depends on if you're bringing in other income, like if you have a day job, W-2 income coming in. So that one depends. So because there are two pieces to your reselling profit. So you're typically gonna owe both income tax, which is the one we're all familiar with, but also self-employment tax. So there's also a rule though that if you make less than $400 of self-employment income, then you don't owe self-employment tax. So if you don't have any other income outside of that, it can all get wiped out by the standard deduction, in which case you wouldn't have to report any of it. But that, I don't know, I feel like I could go like 5 different ways right now, So those are the short answers.
What is the, so for the standard deduction, what is the income level? It's a certain income level, right, for the year?
So yeah, the standard deduction is just on the individual side. That's apart from all the reselling income and self-employment stuff. So if you're single, it's just over $12,000. And if you're married filing jointly, it's double that.
Right. Which is not a lot of money. So
yeah,
hopefully nobody here is making that little, I hope.
Yeah, but the standard deduction does not wipe out your reselling income for self-employment tax purposes.
Okay. So see, guys, this is why you need somebody like Mark. We're going to talk about how you can connect with him when this is all done. Okay, let's see. When you buy, some of these might be a little redundant. We might have covered some of this. So when you buy an item, okay, so they're addressing this kind of to me. So in my videos a lot, when I'm out at one of these Goodwill shops, I'm mostly buying for resale, but sometimes I do pick up things that I end up keeping. So they're asking, what is the best way you keep track of that? I mean, because the Goodwills don't want you paying separately for stuff. That's just going to make a lot of people really upset. So I do pay for it out of my business account. So what's the best way to manage that if I'm keeping something for myself?
Like if you have inventory and you decide to keep it for yourself?
Yeah, so I go to Goodwill and I buy a bunch of stuff for resale, and 1 or 2 of the things in the cart I'm planning on keeping. I mean, would it be best for me to just buy it from my business?
I mean, if you're keeping it, you just want to make sure that you would have to break it out separately from the receipt, I guess. So if you spend $100 and 10 of them are for you personally, then you'll just have to make sure that you only record that $90 of inventory purchase
as an expense. Yeah. I know it gets a little muddy because it's coming out of the business account and all that, but.
Oh yeah. So if you're paying for it with the business account, then like if you're using a bookkeeping program, for example, you'd have to split that transaction and classify.
Okay.
Yeah, classify the personal portion to, I think like an, what do you call it? An owner distribution, like an equity distribution, like you're paying yourself.
I know for sales tax purposes, because I still have to file quarterly sales tax, even though eBay covers it, I still have to put the 0, but that's covered in the use tax. So you end up going back and paying some sales tax on it or something like that. See, I know enough just to be dangerous. I was always told, just put something in the use tax, you won't raise any red flags then. Pay him something. Oh, this is a great question. I love this one. Do you have to pay taxes on things you sold that are inherited?
That are like
inherited.
Inherited.
Yeah. So they didn't go buy them specifically for the business. It's just something they've had, it's been in the family, and now they're selling it. Still counts as income, right?
Yeah. So when you inherit something, you inherit the previous owner's basis. Oh, no. Hang on, you're putting me on the spot. So when you inherit something.
They ask tough questions.
No. When you inherit something, there's a step up in basis is what they call it. So if, let's say they bought it for like 2 cents in 1905, but today, let's say they pass away and you inherit it. If the market value is $1,000, then you inherit that market value becomes your cost. It's a step up in basis is what they call it. So when you sell it for $1,500, that's going to be the sales price, but your cost is going to be the $1,000. So
what if you sell it for the same as the value? Is it a wash?
Yeah, then you get the money, but there's no taxable profit.
Perfect. And then that kind of goes with Tammy A asking, what if you're just selling many items you own? Is that still reselling income?
Yeah.
And it's that same principle. It goes on the market value, or if you can remember what you paid for it, kind of thing.
Yeah. So typically you'll use your original cost. The trouble there is a lot of times you'll have no idea what you paid for it.
Right.
So, I mean, you'll just typically have to just come up with your best estimate of what you would have paid for it.
Yeah.
And a lot of times, I mean, in some cases, you'll have paid more for it than you sell it for. Like you're selling it less than what you bought it for. In which case you'll still want to report it because you'll show a loss, and that
Right.
loss can offset other income on your tax return. So it'll benefit you.
Yeah, that's a great point. It's okay to take a loss on this. Like, I mean, if you enjoyed it for a few years and everything, it's all good. Take the loss, move it on, and write it off your business.
A lot of times people are like, oh, I don't want to report it because I just made a loss. And I'm like, well, that's why you should report it, because that'll reduce your overall taxes. Yeah,
I remember when we were raising thoroughbred horses, that industry is a little bit different on the hobby loss. Because what is it normally? How many years can you take a loss in your business before they get it? Is it 1 out of 3?
I think it's 3 out of 5. So if you have a loss more than 3 out of 5 years, then the IRS.
Okay, so that must be. And so then in the racehorse industry.
Oh no, for horses it's different. That's like the one weird tax thing.
It's bigger, yeah. You can take a loss for like 5 years.
It's like 5 out of 7 or something.
That's it. Yeah. So I always thought that's really cool.
Yeah.
It takes so long to get those suckers to the track.
Yeah.
All right. Let's see. What can we write off?
Yeah. So, I mean, typically, any expense that you incur as part of your business operation is typically going to be deductible, or at least partially deductible. The trick, there's a few deductions that, sometimes you have to depreciate it, or sometimes it's only 50% deductible, but it's usually going to be 100% deductible. There's only a few, types of deductions that are a little bit different. Like, meals, business meals or travel meals are typically 50% deductible. That's actually different, with the recent legislation that they pushed through. They actually made them 100% deductible, I think, for the next 2 years. So,
is that one of those red flags though with the IRS? Too much.
Not necessarily. I mean,
okay.
If your biggest deduction is meals, that might be a red flag. But
yeah, I mean, because I used to travel a lot, and I just always avoided writing off any of the meal stuff.
Yeah, I mean, if it's part of like legitimate travel, I would definitely write it off.
Go back and redo those taxes.
Yeah, maybe.
So, and then the mileage thing, because I heard some people talking about, well, I just, you can either do the mileage, or what's the other one you can do with your vehicle? There's 2 different ways you can write that off, right?
Yeah, so you can either deduct your mileage or your actual expenses that you incur.
Okay.
Which would be like, your gas, maintenance, repairs.
So if you have a clunker that's in the shop all the time, that might be the better way to go for me.
Yeah, for sure.
This has been a very expensive year for this car. I have to think about that one. And what is the mileage at this year?
Yeah, that's a good question. It's like, I don't know. I'm going to Google it right now.
I'm still stuck where it was like 26 cents, and I know it's more than that now.
No, yeah, it's 57 and a half for 2020.
Wow.
It actually went down half a cent from last year or from 2019.
Wow, that's awesome.
Well, 57 and a half for the year that for 2020, which is last year.
Right. Yeah, that adds up fast, you guys. Like, really need to log your going to the thrift store, going to the yard sales, and so, I mean, it's just your business related mileage. But if you do a lot of driving in the business, like when I go to the post office, and that trip's just designated of going and dropping stuff at the post office, logging. You're like, okay, this is a good question. We're gonna get a little tricky questions here. We're gonna test you. What if my husband has a job and I am a reseller? We have a combined income of over $150,000 a year. Most of that is his. At what gross sales level should I create a separate business?
Mm.
And I don't think it's as much as creating the separate business as a separate. Wouldn't you be like have to go like under an S corp or something?
Not necessarily. So I thought she was going a different direction. I thought she was going to say, at what point should I file separately rather than jointly?
Oh.
And my answer to that is it's still almost always going to be more beneficial to file jointly. But then as far as filing a separate business, like, maybe setting up an LLC, there's really no magic number. The main purpose of an LLC is for liability protection. It's not going to be any different.
Yeah, I was going to say, because the LLC still went on a Schedule C on our joint taxes. Like I had this issue.
Right. So, but then once you have the LLC, you can elect. It's called electing S corp status. That's what you're really doing when you're forming an S corp. You're telling the IRS you want it taxed a different way. And that makes sense. There's no firm number for this either, but that starts to make sense once you get up past like $40,000 of annual profit. But as an S corp, you're not subject to self-employment tax, which is 15% of your profit, basically, that you're paying out in tax. So when you're an S corp, you don't pay that. You just want to make sure that you're making enough profit so that you can offset, so that your savings, the tax savings, more than offset the additional costs that you incur from operating as an S corp.
Okay.
So
again, that was as perfecting pearls, Julie. And I'll give you a way to connect with Mark after this. So these are great questions. You guys, I love that you guys are really thinking deeply into your business. That's awesome.
There's one I see. I don't know if I'm skipping ahead of you, but Kathy said that her accountant records, I think, her reselling on a Schedule D as opposed to a Schedule C.
I missed that one. I didn't even know there was a Schedule D.
Well, so Schedule D is that's where like investments go.
Okay.
It's for capital assets, and inventory is not considered a capital asset. So I would say, unless there's something unique about that situation, that it should actually go on a Schedule C.
Okay. And we kind of covered this one a little bit, but just to specifically address the issue, a lot of my viewers are retired. They're on Social Security as like their main income, and they want to sell some stuff to supplement their Social Security. So she's asking, do I have to file on what I made on eBay? I mean, is there a certain number? Because I know you kind of went back to before there was a cap number, but is that a little different, or is it?
It's similar. So there is a certain number for your specific situation, because even Social Security is taxable when your overall income exceeds a certain amount. So there's different thresholds. I think it's either going to be 50% taxable or like 85% taxable, depending on your overall income. So yeah, your reselling is the reselling income will most likely be taxable. and that's going to boost up your overall income, when it combines with your Social Security, which might make your Social Security partially taxable. But I still wouldn't let that deter you from reselling. You might owe more tax, but at the end of the day, you're still going to walk away with more money in your pocket.
I was just going to say that I see so many people afraid to go over a certain amount or do something. But if you're doing that and you're paying taxes, that means you're making money. So it's okay if there's an expense because you're making money to cover that expense.
Bingo.
Totally get that. How long can you write off business expenses before you get actual sales revenue? I think they mean profit, maybe, or net profit. If I'm understanding that correctly. And I think we covered that in the 3 out of 5 years thing. But I wouldn't go too long not making profit. I would look at what's going on that you're not making profits, because you should be making profits. Let's see.
So and I can just touch on that one about what we were talking about earlier. So the IRS will say, okay, well, they could say if you have a loss more than 3 years in a row, they could say, okay, it doesn't look like you're really a business. It looks like maybe you're just a hobby, because obviously you're not trying to make any money because you're not making any money. So if they reclassify you to a hobby, that means that your expenses are actually not deductible.
Right.
So because they will tax your hobby income, but they won't allow you to have business deductions against that income. So being a hobby is actually less advantageous for tax purposes.
Gotcha.
Sometimes people say, well, I sell on eBay, but it's just a hobby, so I don't have to report it. But actually, you do have to report it. And if it is a hobby, then you can't deduct any expenses. So you don't want to go that way.
And I mean, technically, and we're having this conversation over in the Niche to Profit group right now, technically, every dollar you make in your reselling business, you should be claiming according to the IRS. Now, we know not everybody does that, and that's between you and your conscience and the IRS. But I mean, but technically, if you're selling stuff, that's income. So.
Yep.
Let's see what I know we're missing another. Oh, let me ask this. Then we covered all of our questions that came in ahead. What deductions were previously allowed but are no longer allowed?
Yeah, that's a good one. There's probably a bunch, but one that changed within the last couple of years was you used to be able to. So there's the home office deduction for self-employed people, but prior to 2018, you could also deduct your home office if you were employed, like if you were a W-2 employee and you were working at home for the convenience of the employer, you could take the home office deduction, but that one has been disallowed. So you can't take the home office deduction if you're employed. You can still take it if you're self-employed.
So that's interesting that with the current state of affairs that went away.
And I don't think that they've changed that. I would have to go back and see if they've changed that to give us more relief, but as far as I'm aware, they haven't.
So let's say, like, for me, I am only self-employed. I don't have any W-2 income. So, and I have 2 designated rooms of my home that are strictly for conducting business. So I can write off that percentage of my home, right?
Right. Yep.
Perfect. Oh, this is a good question from Julie. When we do live sales on YouTube or Instagram, should we be charging sales tax for the buyer's state, or do we need to charge sales tax at all?
Yeah, it's a good one. So yeah, that one's tricky because most platforms take care of that for you now, but Instagram is not that sophisticated yet. I mean, they're not a sales platform, so they don't.
YouTube definitely isn't.
Yeah. But so when that's the case, when the platform does not collect sales tax for you, you're only on the hook technically for sales tax for sales that you make to customers who live in your same state, or who live in a state where you have some type of physical or economic presence, which usually is just going to be your own state.
And is that why eBay has to do it? Is because that venue is considered as operating in that state?
Yeah, so eBay is technically the seller. They're the marketplace facilitator, they're called, and most states have these marketplace facilitator laws now, which require the platforms to do all that for you. But if you sell through Shopify or through Instagram, like those platforms are not considered marketplace facilitators, so you would have to deal with that on your own.
So, okay, I'm sure that will catch up to us at some point, Julie. They'll let us know. Let's see. Steven says, I'll be retiring in 4 years. I need to make more money, but the more deductions I take, the less money is generated for retirement. Catch 22, or is there some way to help yourself?
As far as
understand that, but the more deductions I take, the less money is generated for retirement.
So, I mean, maybe he's talking about like Social Security credits. Like the more money you make while you're working, the higher Social Security payout you get.
Stephen, can you clarify that for us in the chat over there? Mrs. Gaskell asks, never knew small eBay sales should be reported on your taxes. Do you have to go back years and years in your filings to fix things, or can you just go forward from here?
Yeah, I would probably, at a minimum, I mean, what you do going backward is up to you. I would probably just focus on the future.
You know, unless you've made like hundreds of thousands of dollars that they're going to get you for tax evasion.
That's exactly what I was going to say.
I always think it's like, does the YouTube bots in here like, ooh, tax evasion? Let's go see what they're talking about.
Well, and in a lot of cases, people do make losses. So I'm like, you know, if you feel like maybe in prior years you actually lost money overall based on the original cost, then yeah, don't worry about it.
Yeah, I don't know. So are you familiar, I'm hoping you are, with now how we always got our 1099s from PayPal for selling over 20,000 and 200 transactions for a year. How is eBay handling that now with the managed payments?
So in that case, eBay should be sending out those 1099s rather than PayPal.
Are they doing the same threshold, you think, or are they just sending them out?
Yeah, because that's like an IRS, that's like a federal law that the platforms are subject to. So they, you know, because Amazon sends out 1099s, so I assume PayPal will too.
So, and that'll be interesting. Like those of us who got switched over late in the year and we haven't done the $20,000 and 200 transactions on eBay yet for the year, we still have to report that. We still have to figure that out, even without that 1099. That's going to be a little bit of a mess.
Yeah.
Well, you're doing my taxes this year. You ready to handle that?
Well, yeah. So that's a good point. Like, even if you don't surpass that threshold, you're still responsible for reporting that income. And a lot of, so the 1099s also include, like, they'll often include sales tax collected, which isn't something you should be taxed on. So if you use the number on your 1099 for your total sales, and then you don't deduct the sales tax out of it, you're going to be taxed. You're going to be overtaxed. So that's one reason why I encourage people to do their own bookkeeping. Because, like, me personally, I'm like, I want to use my numbers because I know they're right. I don't want to use what eBay tells me they are.
I've never fully trusted the eBay numbers. I gotta tell you guys, I've never fully trusted eBay. I've been on eBay for 22 years, and they are a corporation. They're a very large corporation, and they are in the business of taking care of their business. They've got, I don't know how many millions of sellers, is it now? I don't know. I don't even know what the number is. They don't know who you are from Adam. They don't care if there's a little accounting mistake on your account, as long as in general their percentage of error rate is low. So a long way of saying, yeah, keep track of your own numbers. Super important. Beth says, I never understood why you would charge sales tax on used items. That would make the sales tax being applied twice to an item. Once when it was new and second when it's resold. Yeah, I mean, but until the laws change, that's the way it is. Let's see. Taxes on each transaction, not the item. I don't know, is it? I almost thought of sales tax as being item-based, not transaction-based. Or is there a difference?
Yeah, I don't know. I don't know what the difference is.
Yeah, I think it's pretty much the same. Oh, okay. So Stephen Williams, the more money I make, the more Social Security will be paid in the future. But if I use deductions to lower my taxes, then my income is less, thus less Social Security payout. Okay, that makes sense.
Yeah, that's the same question people have when they're trying to get a loan for a house. You know, they want to reduce their taxable income as much as possible, but they want to show more money, more profit, so they can get a better loan. So that
catch-22.
Yeah.
Just got to prioritize. Let's see. Okay, throw those questions at us, guys. We have about 15 more minutes. So what if you were W-2 employed and now you aren't? Can you deduct a home office in the same year? Would it be for a percentage of the year then that?
Yeah, I mean, if you didn't start your reselling business until after your W-2 employment, then you would just use 50% of the year or whatever. But if you were reselling at the same time you were employed, and you had a space in your home that you used just for your reselling business, then you wouldn't necessarily have to prorate it like that.
And if you're doing business from home, and the main reason you chose that location is because of the location and the benefit to your business, can you fully deduct rent as a business expense? I wish.
Yeah, you can partially deduct the rent.
Yeah, because I just did the same thing. Like, I'm sitting pretty for doing, I know this sounds crazy, but I'm so excited about doing a yard sale because I am on just off of a major street. Like, the traffic is going to be awesome. I have this enormous garage and driveway, and so that location was definitely picked for the business. But yeah, for me, it's the 2 rooms, which I made sure, that's not family. You can't even, you walk in, that room is for business. And the guinea pigs are just mascots because they're in the eBay room. And some of you are asking questions that we already did cover earlier in the video. So I encourage you, once this is done, you can go back and watch from the beginning. You will get your question answered. Don't want to be redundant for those that have been here the whole time. Is it possible for tax laws to be applied to yard sales? It's income. Technically.
Yes. Yeah, pretty much the same thing.
I know from working with a very unscrupulous woman who owned a business that had a lot of cash transactions. Cash is very hard to track for the IRS. I am not encouraging. I'm just saying, take that as you will. You can rent your own property. I have a barn, so I can pay rent to myself from my business.
Yeah. I mean, the thing there is
But then technically the income that you pay for the barn is still income, so you don't really get an advantage there. Yeah.
Yes. Yeah. Then you have to report the rental. You get the deduction on the business side, but then you have to report the income on the personal side. So actually the better thing to do is,
Just write off the barn portion, right?
yeah, either as part of the home office deduction or, and it also depends on what type of business entity you have. I'll just leave, yes, I'll leave that one there.
Yeah. So as far as the business entities, I just want to revisit that a little bit. There's LLC, there's S Corp, and then there's just sole proprietor, right? Are those the three?
Pretty much, yeah. And then if you want to split it a little bit more, you'll have like a single member LLC versus a multi-member LLC.
Okay.
And the multi-member would be treated as a partnership for tax purposes.
Because I was told that I need to look into being an S Corp. What is the advantage of having an S Corp versus an LLC?
Yeah, so the S Corp profits are not subject to self-employment tax.
Okay, that's the big advantage.
So, and the big difference with an S Corp is that you have to pay yourself a salary. Like you have to, as an owner, you have to take a salary through payroll.
Okay. I can do that.
Yeah, so that's subject to payroll taxes and everything, but all the profit left over is you're basically saving 15%. So, yeah, I mean, you can save a big chunk of money at a certain point.
Awesome. We need to talk.
Yeah.
So many questions. And so that's what I want to spend this last few minutes that we're together here. And I know I just saw one more question come in. And we've kind of addressed this, Bethay, that if you don't get a 1099 for 2020, then you don't have to worry about tax, right? And I would say no, because I'm pretty sure the business is still reporting that they paid you that money, right? Am I correct on that? Just because they didn't send you a 1099 doesn't mean the IRS doesn't know you got sent that money.
Well, if the company doesn't send you a 1099, then they're not sending one to the IRS either. So the IRS probably won't know about it.
Oh, okay. So do with that information what you will. Again, not advising one way or the other on that. Sales that were canceled. Yeah, that's another reason that you need to track your own numbers, that eBay includes sales that were canceled. So you cannot just go by that sales number that eBay gives you, because your returns, your refunds, your return postage, all of that is a deduction, guys. You want to write all that off. Yep. And for those just tuning in, we have covered a lot of stuff in this hour, but I want to leave time for Mark to kind of talk about what's available on his website, what services he offers. And let's see if I don't even know how I can add. Let's see. We do this and no, I don't want to do that. Hold on. Still learning my software here. Where is, I was trying to share the screen to show, I see it here, but I can't, maybe I have to. Nope, because that just takes me off of here. That's really strange. Because you can see it, but I can't get that on the screen. Oh, maybe we do this. There it is. All right.
Boom.
So your website is notyourdadscpa.com. And you have something called the Reseller Tax Academy. Can we just talk about that for a minute? What happens if I join that academy?
Yeah, so this is it's an online course it's got 9 separate modules, just all about how to help you optimize your tax situation. So, it's not like a tax preparation course. It's not going to tell you what numbers to put into what boxes. It's more about like, what can you do throughout the year to set yourself up for the best possible tax savings, because a lot of people, they'll come to their CPA or their accountant at the end of the year, and they'll say, here's all my stuff, how much money can you save me?
Yeah.
And they'll be like, well,
don't like that, do they?
yeah, it's like, well, if we would have talked on January 1st, I could have told you some things to start doing that would have allowed me to save you a lot of money right now. But, at this point, there's not a lot I can do. So this is really about, helping you just get a basic understanding, a basic education that's going to put you in the best possible position for savings. And one thing a lot of people tell me is that it helps them reduce their anxiety. People, more people than you would think, or more people than I thought, really stress and like literally lose sleep over the fact that their taxes are not, or they don't know what's going on with their taxes. So, but yeah, this is actually going on sale. So I do a January sale next week. But I guess for those who see this video after that sale is over, I'm giving you a discount code that you can link wherever you want, so they can contact you for that. But yeah,
Here we are. And one of my wonderful moderators over there can put the code in. It's NicheLady, right? That's what we decided on.
Yeah.
Yes. Okay.
Yeah. So if you see this after January, then use that code.
NicheLady. Easy to remember, right? But yeah, you guys, I am joining this. I'm going to do this. And it's January, like it's only the first week of January. And I know some of you are going, but I didn't start on the first. Start now. I had to learn that like 2 years ago. I had to learn that is don't keep putting off just because you haven't done before. Start where you're at. Like, because starting, like for me, it was my inventory, and starting somewhere was better than starting nowhere and starting to get a hold of it. So, and we'll have all of these links, will be down in the description of the video. Never fear. And then if they want to come to you to say, get their taxes done, I mean, you offer that service as well?
Yeah, so I definitely do a lot of taxes, some bookkeeping, just general consulting. But yeah, if you need help with taxes, feel free to shoot me an email, either on my website or just email me at mark@notyourdadscpa, and I'm happy to help.
And I want to know how you came up with the name. I'm sure there's a story there.
Yeah, it just came to me. I feel like there's a root beer called not your father's root beer, not your dad's root beer or something. And I just
there's dad's root beer.
Or no, maybe it's called dad's. I don't know where I got it. Okay, maybe I don't know. It just came to me.
Dude, it's catchy. It's catchy. But Mark, thank you so much I know we really picked your brain today. And I really look forward to working with you this year and getting my stuff under control. And I hope it makes everybody feel better that I don't have this all together. I super duper need help in the area of my taxes, and not just the taxes, but just getting my business operating more efficiently and knowing my numbers a little bit more effectively. I mean, I'm kind of a mess in that department, but this is the year. This is the year I'm going to get it together. And this is going to conquer those numbers. So I hope some of you will join me in that journey, which will be fun. Maybe we can have you back like later in the year and talk about how that's going.
Yeah, absolutely.
So Buick had that slogan years ago. All right, well, maybe that's where it trickled in. So.
Yeah.
All right, everyone. Thanks for being here. Thanks for hanging out. And now go get that bookkeeping together and go be profitable and make it fun. And we will see you on the next one. Thanks, Mark.
All right, thanks.